This is about a SEBI study that has revealed that 93% of traders lost money in equity F&O trading between FY22 and FY24. In fact, the study adds that only 1% of individual traders earned profits that were exceeding 1 lakh after transaction costs. Let's go across to my colleague Ankur Mishra, who's here with more details of what this study really entails, the further details that this study has, and then we'll go to our live guest who's joining us in a short while. Ankur, take us through the details of the SEBI study.
Yes, SEBI has done a new study on measuring F&O losses, and new study says that 93% of traders have made losses in F&O from FY22 to FY24. Now, this cutoff is important because you remember in 2023 January, SEBI came out with a study where it revealed that 89% of traders have actually made losses. So, if you take that study as a base, the 4% increase has happened from FY22 to FY24, whereby SEBI has concluded that 93% of investors have actually made losses. Now, to take this into perspective, over 1 crore investors are there who has made average losses of 2 lakh per trader. This happened again in FY22 to FY24. In these 2 years, top 3.5% of loss makers faced average loss of 28 lakhs each in the same period. Now, who has made actually money? Only 1% of individual traders earn profits exceeding 1 lakh after transaction cost. And who are these investors? SEBI study says that proprietary traders, FPIs, they had profits ranging from 33,000 crore and 28,000 crore in FY23 and FY24. Only these were the few set of investors who would have made a profit, but otherwise individual traders spent rupees 50,000 crore on transaction cost alone over FY22 to FY24. And how much is the brokerage? That is around 51% of that cost. Apart from that, if you talk about B30 cities, traders from B30 cities made over 72% of F&O base, compared to 62% for mutual fund in the same period, and they were mostly the young traders, because the study says that participation from young traders below 30 rose to 31% in FY23, and in FY24 it rose to 43%. So all in all, the losses in F&O continues for retail investors.
Absolutely, Ankur, and it is indeed a very, very alarming study. And of course, to take this, let's take this further and understand the implications of this and what more can be done to protect investor interests. We're now joined by Shriram Subramanian, the founder and MD of InGovern. Thanks very much, Mr. Subramanian, for joining us this evening on ET. Now, the study is as serious as it gets. You know, this has been one of the longest concerns for the longest time so far as SEBI is concerned. I mean, they've been alarm bells that have rung earlier as well, and now another study stating that only 1% of individual traders actually earn profits that exceeded 1 lakh after transaction costs. So the big question is, how can investor interest in light of these findings and what's happening around us be protected?
Good evening. I think at the end of the day, SEBI can only do so much. It can educate investors. It can educate investors through brokerages. The SEBI chairperson has been in media telling that there is a lot of speculation. And if you see over the last 2-3 years post-COVID, obviously the number of DP accounts has more than tripled or quadrupled, right? So to that extent, the number of new investors who have entered the markets has increased phenomenally. But the only sad part is most of these investors are going into F&O segment rather than investing in the equity segment and holding for a long duration. That would have been an investing culture that we need to build, not at this trading culture where as SEBI's research itself. This is where SEBI, I think the Department of Economic Research has put out this study with minute statistics so that investors are made aware, brokers are made aware of that 90% of individual investors are losing. And who is the money going to? The proprietary traders and the people who have very sophisticated tools, including institutional traders, are making lots of money. And that is where the shift is happening. Wealth is, or the funds is shifting from individual investors who are losing money to the
So far as
traders.
this study is concerned, sir, and this study, the one critical point so far as the study is concerned is that participation from young traders, that is below 30, has risen from 31% in FY23 to 43% in FY24. And sir, we do know that SEBI has intervened earlier as well and communicated via AMFI to put mechanisms in place, to put a policy framework in place. So I just want to understand from you what kind of policy should be designed. While you were right about educating these young investors, young traders, and that kind of culture has to develop in the country, but urgently what's needed at this point is some sort of a policy intervention from the regulator itself. Where do you think SEBI is headed? What kind of policy intervention is really needed at this point to sort of discourage these gullible investors?
So a couple of policy interventions that could be taken up. One is obviously increasing the contract size. That is something that was suggested. Two is having a net worth requirement for trading in F&O. If they increase the net worth requirement, the friction to join these markets will increase. So not everybody can start trading in F&O. So if they, for example, have an average net worth of say 1 crore or 5 crores or something of that sort, which is of discretionary. So one has to show investment funds of about 5 crores, then only you can trade in F&O. That would clamp down many of these people who are trading in F&O. So I think that is, there are multiple ways to do it. At the end of the day, SEBI knows this one. The brokerage community and will obviously push back because they are making 25,000 crores as is this one, because more than 50% is going as brokerage, and the liquidity in the markets could take a temporary setback, definitely. And many of these new age investors could then obviously move out of markets.
Yes. So very important point that you made right here is that net worth requirement of 1 crore or 5 crore should be there so as to ascertain investor interest, given that people who fall under these age brackets will of course be mature investors who understand the risks pretty well. I want to understand from you, you also mentioned the kind of impact that it will have on the markets, and of course we are seeing record highs being broken by the markets. Indian markets are one of the most vibrant across the world. So do help us understand the kind of impact that the markets will have when these policy measures are brought in. Is this going to be a temporary blip because the larger wellness of the sector is more important, investor interest is more important?
No, I don't think there is a direct correlation between the markets being at an all-time high to the F&O trading that is happening. Definitely, there will be some setback to liquidity. There will be some setback to market participants, etc. Because brokerage houses will definitely this one. I don't think there is still anybody talking about these policy interventions that you and I are currently discussing, because SEBI itself has not indicated or put out any discussion paper on this front. And obviously brokerage community, as I told, will push back. So definitely I would think there will be an element of consolidation if these policy measures are brought. Definitely the liquidity in the F&O markets will dry up a lot more, and it will only be the institutional and high net worth individuals who can trade then if they put this net worth requirement.
All right, and sir, the market regulator will have to tread very carefully between maintaining that fine balance between protecting investor interest and also making sure that liquidity in the market doesn't get suffered much. On that note, thank you very much, sir, once again for joining us here and sharing your thoughts on this very, very critical story that we are tracking.
If you like this video, then like, share and subscribe to ET Now.